Hello and welcome to Trading Hour. I'm Sonal Bhutra and with me is Surbhi Upadhyay. Surbhi, good morning. And it is turning out to be a Friday, which was not something that the bulls would have liked. Nifty is down 150 points from the highs of the day. The mid caps, which have been doing well, they continue to do well, 180 points higher on that one. But IT index, that's the one which is in focus today after that commentary coming in from Accenture. They've maintained their guidance, and that is something that the street likes because so far there was a worry that maybe demand won't continue, budgets won't continue the way they did, and that has come as a relief now.
Oh, absolutely, and if it wasn't for the IT part of the market, then the Nifty would have been looking very different because banks have disappointed. Absolutely, take that point, Sonal. Bank Nifty, after having 2 or 3 good days, after having actually a good week, is seeing immediate profit taking right now. So the index was up about 3.5% before we started today's trading action. Now it's already shaving off some of that recent up move or upswing that we've had. But the counter is largely IT. There are some auto stocks which were cooling off in the earlier part of the week, but now the buyers are coming in. So, for instance, Hero Moto is seeing some traction. There are some names like Cipla and Dr. Reddy's from the pharma space that are also finding takers this morning. But other than that, I mean, apart from banks, a couple of other big boys are also dragging. Look at Reliance, look at L&T. These are not stocks that are really contributing. So I guess, Sonal, perhaps it's a bit of a fear of heights, right? We've seen that in the US market as well with this non-stop rally. Yesterday was a cool-off day. And perhaps here as well, some consolidation setting in to digest the recent gains.
But you know, every time there's consolidation, there's a rally. It's followed by a rally. So we don't know which way things are going. But for now, for today at least, markets are consolidating. The Nifty lower by 40 points. But let's put these questions forth to our guest today. Gautam Baid from Complete Circle Stellar Wealth PMS is joining us now to discuss the market fundamentals and his stock sectoral picks as well. Gautam, good morning. Thank you so much for joining us. Always a pleasure speaking with you. You know, as Surbhi was just pointing out, maybe markets are afraid of the highs now. There's a fear now in terms of higher valuations. We are seeing the support only coming from Nifty IT today so far. But in the broader markets, what is your suggestion? You know, because most of the stocks have rallied. Do you think there is still some steam left, or now investors should be a little careful in that space?
Hi Sonal, hi Surbhi. Thank you for having me on your show. You're absolutely right that the valuations of the good quality growth stocks in the broader market have become very expensive. The markets have obviously rapidly factored in the continuity of the policy of the current dispensation. And from here on, one needs to be very selective and have a bottom-up approach and focus on those stocks which are having very strong earning visibility and enjoying sectoral tailwinds. Because if and when the market does experience a correction in the future, the stocks which are basically just going up on hope without really any strong earnings to back them will fall the hardest. So now is the time to actually make use of this rally to consolidate your portfolio into the stronger names and high quality stocks. That is the strategy from here on.
Okay, Gautam, hi. Always great to have you on our show. So we were looking at some of the picks that you have in mind, at least stocks that you are looking to own. And I want to start with ICICI Bank, and that's really interesting, right? So anyway, banks have seen some interest come back after a long, long time. But I'm wondering why you're going for, say, an ICICI Bank specifically and not with the other market favorite, which is HDFC Bank, because there's so much chatter around whether that FPI headroom sort of increases, and if they get added to the MSCI indices, if the weight goes up, then anyway, there's like billions of dollars waiting to flow in the stock. So just technically, the stock could rally. But despite that, on a fundamental basis, you're going with ICICI Bank. Why is that?
It will be the time to buy a well-managed franchise is when the entire industry is out of favor with investors. And most of the private sector banks in India today are trading below their long-term price-to-book mean multiples. And there are 4 key reasons why this has happened. Why this entire pack of private sector banks in India have undergone a derating over the last 3 years. The first big reason is competition from public sector banks. So between 2010 and 2020, there was negligible competition from the public sector banks because they were beset with asset quality issues. But once they became strongly recapitalized, then we have seen in the last 4 years that the private sector banks have faced increased competition from these public sector banks. The second reason for the derating of the private banking space has been net interest margin compression. As people have taken money out of bank fixed deposits and moved more into the capital market side, the banks are in an increased competition among themselves to increase deposit rates, and that in turn has pressured the net interest margins. The third factor which has led to the derating of the sector is regulatory action. So if you look at the RBI actions against Paytm Payments Bank or against Kotak Mahindra Bank, then those regulatory actions have further soured sentiment of investors in the financial space. And fourth and very important technical reason is that over the last 3 to 4 years, we have seen billions of dollars of FII selling. And as we know, financials and especially private sector banks were one of the largest weightages in foreign investor portfolios. So that intense selling also led to derating of the sector. However, you are getting a very well-managed bank with a negligible net NPA. The FY26 net NPA for ICICI Bank is expected to be below 0.5%. And you're getting this bank at a price to book multiple of less than 2 times on FY26 basis with return on asset above 2%. So I think the only key risk to monitor here would be any increased stress in the unsecured personal loans and credit card portfolio of the bank. But other than that, I think this is the time to actually go in for this particular franchise. And you also mentioned HDFC Bank a while ago. Here, I would like to mention that ICICI Bank is far better placed compared to HDFC Bank when it comes to the credit to deposit ratio. The unsaid or implied mandate of the Reserve Bank of India is for these banks to bring their credit to deposit ratio below 80%. As of today, HDFC Bank has got a credit to deposit ratio of 110%, whereas ICICI Bank has got a credit to deposit ratio of just 85%. As a result, HDFC Bank will have to increase its number of branches to increase the deposits, and that will put pressure on its cost to income ratio. And they'll also have to increase their deposit rates as well. So that will lead to suppressed net income growth. So that way, ICICI Bank is much better placed.
Okay, got it. Thanks for the perspective. That really answers my question. I was wondering why not HDFC Bank, but it's that CD ratio that you have on your mind. So we'll keep it on our mind as well. Sonal.
Yeah, but Gautam, I just want to understand also now, from here on, do you think money will move completely or mostly from PSU banking space to private banking space? This is something the investors will focus on from here on?
Well, I don't think there'll be a wholesale shift from the public sector banks to private sector banks, but right now you're having many of these public sector banks trading at a premium to private sector banks. I think the corporate governance or the governance risks and the regulatory and the political risks still exist in the public sector banking space. So this discount which the private sector banks are now trading to their public counterparts, I think it's unjustified, and that gap should narrow. So that will lead to some extra alpha generation for investors in this private banking space, in my view.
Okay. Gautam, what else? I mean, so we've spoken about banks. Before we get to your next idea or the next company that you like, just a word on IT, because that's today's flavor. Everybody's trying to sort of read between the lines on Accenture's numbers and figure out if the turnaround is around the corner. You know, IT stocks are amazing because they've had fantastic trading bounces and trading rallies when none of the companies so far are going out there thumping the table and saying, hey, demand is coming back. But it's just, I think, interesting market positioning that we've got going. But what do you think, and what is your sense on IT?
Well, so we often see, like today, for instance, the Nifty is in the red. Whenever the markets go down, IT tends to do better. Also, yesterday, the Indian rupee touched an all-time low versus the US dollar. So it's more of a tactical move, in my view. It's more of a short-term trading bounce, and because a lot of traders and algos basically they just monitor the rupee dollar exchange rate, and then they make their short-term positions. So I think we are just having a tactical bounce, but there is no strong demand uptick as such in the IT services space right now. There are so many pockets in the market today which are promising you 20-25% or even higher growth rates. So why go for single-digit growth in such a raging bull market? You want to be in pockets where you get very, very high growth, because you get rewarded very handsomely for backing high growth in a bull market.
Okay. So that's about IT. The other stock or the pick that you like is Ethos. It's a play on the luxury market as well. We've spoken about how post-COVID luxury market has seen a one-way move. Tell us first, why do you like this particular name in that segment, in the consumption segment? And what's your take on consumption in general? Do you think that could be the theme going forward?
Well, consumption has been an evergreen theme in India for the last few decades. But as of today, rural consumption, has been a bit slow and been struggling actually over the last 2 years. But there are clearly green shoots visible if you look at the commentary in the conference calls of FMCG companies and consumer staple companies like Dabur, Britannia, HUL, it was very clear in the March quarter itself that rural India was beginning to heal. And now with this recent coalition government mandate, I think the government is going to put an increased emphasis on boosting rural consumption and boosting the incomes of the rural population. So you may see a further uptick in the two-wheeler auto ancillary names, as well as the domestic agrochemical companies. We are already seeing the market starting to factor in the improved prospects in those two areas. But one theme which has been in vogue for the last decade is premiumization, and especially the upper end consumption in the industry. So the luxury market in India is expected to expand fivefold over the coming decade. And Ethos Limited, in our view, is one of the best premiumization plays in the listed space in India. The company has given a very strong store expansion guidance. As of May 2024, Ethos has 63 stores in 24 cities in India. And the company plans to add 25 new stores in FY25 with a total store count guidance of 150 in the next 5 years. Now, most notably, this company offers you scope for margin and ROC expansion along with revenue growth. And where will this margin and ROC expansion come from? It will come from four key factors. Number one, the company's entry into the high margin certified pre-owned watches segment. The working capital requirements in this particular segment is much more lower compared to its existing business of selling new watches. And that should give a boost to the return on capital employed of the company. The second factor which will boost the margins of this business is the increased share of the exclusive watch brands portfolio in its collection. So that will also boost margins. Number three, this company is basically diversifying into rapidly expanding lifestyle categories like luxury luggage through the Remova brand and luxury jewelry through the Messica and Bulgari brand. So that will give a further boost with margin. And fourth point is that under the Trade and Economic Partnership Agreement, which India signed with Switzerland recently, the current customs duty of 22% on Swiss watches will be gradually phased out over the next 7 years, starting with a 3% cut in FY25. So this will give a further fillip to Ethos Limited's margin. So when you get margin expansion along with ROC expansion and revenue growth, then you get valuation re-rating in a particular company. And in light of all these factors, the current valuation at 40 times FY26 multiple looks fair. The improved earnings visibility, the improved longevity earnings growth of this business, and the expanding terminal value provide scope for further re-rating from here.
Okay.
No. All right. Okay. So Ethos, that explains your stance and why you like that stock as well. Got it, Gautam. Good conversation as always. Thank you very much. You have a good weekend and we look forward to connecting again soon. Well, on that note, we do have to slip into a quick break. Come back on the other side and we'll get you the latest headlines from the commodity markets with Manisha Gupta.
For investing.
Welcome back. Let's now shift the focus to the commodity space. We have Manisha with us and she is looking at precious metals today. So what's the latest on gold and silver, Manisha?
Well, we have seen both of these commodities surge. The last couple of weeks were not so great, but we've seen the prices come back in favor. So if you look at the overnight markets, we saw gold prices gain up by 1.5% and silver jumped up by 3.5%. And it's back at around that $30.5 per ounce mark. We did see silver prices hit an 11-year highs of 32, went down all the way back to 27 and below. And we've seen some opportunity buying come back in both of these precious metals right now. Well, one is you have the US economic data not come in so well, and that has led to the US dollar decline. That has been supportive. And we already have seen ECB and Bank of Canada cut interest rates, and the markets are anticipating that come third quarter, and you will have more central banks joining that bandwagon. And it also is about, various geopolitical tensions, especially in Red Sea, and the kind of statements that we are hearing from Houthis, also between Russia and Ukraine, where there have been more drone attacks. So all of that geopolitical premium also seems to be coming back. Even more interestingly, it is about the global central bank buying. It was a record global central bank buying in 2022 to the tune of 1,082 tons of gold. 2023 also was the second highest year in sense of global central buying at around 1,037 tons. Now, the first quarter of this year has seen almost 298 tons of buying, and the month of April has seen another 33 tons being added to it. The month of May also has been on the stronger side. Barring China, most of the other 14 global central banks actually bought gold. Even more interestingly, the World Gold Council recently reached out to 70 global central banks, and they've come back with a report suggesting that most of these banks are talking about adding further gold reserves within their kitty. So there's almost 29% of banks which said that they will be adding gold. You have 81% banks telling you that the reserves will grow going forward. No bank said that they would sell any gold going forward. And the next 5 years, many of these banks anticipate that the gold holding from global central banks would be much higher than what they hold in their reserves, clearly talking about de-dollarization here. So gold clearly in favor because of that. And since the time this report has come in, you have had various banks and brokerages tell you or give you much dizzying higher highs in sense of forecast in case of gold.
Oh, wow. So that is what's happening with precious metals, and especially gold, and that has been the commodity. Everyone's been talking about the big surge that we've seen there. Thank you, Manisha, for joining us with those updates. As always, hope you have a sparkling weekend and all of us here as well. With that, we'll do one thing. We'll slip into a short break. When we return, we'll discuss market technicals with Mitesh Thakkar and also discuss their top trading bets. Stay tuned. Welcome back. You're still tuned into Trading Hour. Well, one sector which is supporting the markets today has to be IT, and this is on the back of Accenture reporting its numbers. The constant currency revenue growth, it was up 1.4%, the revenue decline, but Indian IT stocks, of course, in focus on the back of brokerage notes, the commentary coming in from Accenture as well. Hormaz is joining us now to sum that up for us. Hormaz.
Well, as they say, no bad news is good news, and that's what's rubbing off on the IT stocks as well. If you can see the top 5 gainers on the Nifty, all are IT stocks, be it Infosys, TCS, Wipro, Tech Mahindra, all of them are trading with healthy gains in today's session. That's on the back of Accenture reporting earnings last evening. And they reported a revenue of $16.5 billion, which was 1% lower in US dollar terms, but 1.5% higher when it comes to constant currency terms. When it comes to adjusted revenue, when they're adjusting it for the Forex impact, the revenue was well within the line of their guidance of $16.1 billion to $16.7 billion. The no bad news bit comes from the fact that they have not cut guidance. They have narrowed it down. They've narrowed the band because they have lowered up to the lower end, but lowered the upper end of the guidance. So now it's 1.5% to 2.5% compared to 1% to 3% earlier. Remember, in the previous quarter, they had cut it down from 2% to 5%. So that saw an impact on IT stocks. The bookings also at 21.1 billion, up 26% in constant currency terms. That was a positive as well. There has been a lot of emphasis on generative AI in this quarter because the new bookings were at $900 million. Year-to-date sales have crossed $2 billion within the generative AI segment, and the revenue within this segment has now reached $500 million compared to the $100 million that they had in all of FY23. Now, in the earnings call also, they have highlighted that they are seeing strong demand for digital manufacturing and engineering services. The discretionary spending is constrained, but clients are prioritizing large-scale transformation for revenue conversion, for which is pretty slow. Now, Morgan Stanley is saying that there are some positive data points from this, that there is strategy and consulting businesses returning to growth, and they are seeing this as another confirmation of growth rates bottoming out. But when it comes to discretionary spending, there are still no signs of a revival in that. Now, CLSA is also saying that the lack of decline, the fact that they have not cut guidance is a positive, but they are seeing no material change this quarter when it comes to earnings of these IT companies. They are expected to remain on similar lines compared to March, and they see further downside to the consensus EPS estimates. For on Nomura, they are cautious as the discretionary demand is still some time away, the revival. The Tech Mahindra is their top large cap pick, Coforge, Birlasoft and Eclerx is their top mid cap recommendations, and they have a reduced rating on TCS, Wipro, LTI Mindtree, LTTS and Emphasis. So brokerages still remain on the cautious side, but the street is cheering the results from Accenture.
Oh yeah, absolutely. That coupled with the weakness in the rupee is spelling lots of green for IT stocks today. Hormaz, also tell us about Firstsource. That stock, or rather that company, seems to be giving out some pretty big numbers in terms of guidance. $1 billion in revenue. When is this by?
Big numbers indeed, and they had their analyst day and they're saying that this $1 billion revenue run rate, they aspire to achieve that by the fourth quarter of FY26. So which is by the end of the next financial year is where they want to achieve this revenue run rate. The other target that they've given out is they aspire a 15% EBIT margin by over the medium term is what they are saying. Now the some other takeaways from their analyst day is the fact that they don't have any stated dividend policy, but they have been paying out around 45 to 50% of their profit as dividend back to shareholders. The senior leadership both has time and performance-based stock incentives as well for Firstsource. Now, usually we don't hear IT companies having debt, but Firstsource does. It has a net debt of around 600 crore rupees in FY24, but that is largely for working capital purposes, is what Nomura is saying in its note. And they also laid out some M&A ideas. They said they did not say that they are under works, but they said that if at all they do plan to do some M&A activity, it should be for capability building and not for revenue accretion. So Nomura on Firstsource remains neutral. It has a price target of 200 rupees. 10 analysts have coverage on it. 8 of them have a buy rating, 2 of them have a hold rating. But some big targets laid out by Firstsource, and the street is appreciating that.
Okay, all right, definitely. And Rima always tells us it's not the numbers that the street looks at, but definitely the management commentary, and that's why the stock is reacting on the analyst day takeaways as well. Thank you, Ramas, for joining us for that. But a lot of movers in the broader markets. One of them is Technoplast. It surged by almost 15% now as the company has received final approval for the manufacturing and supply of high-pressure Type 4 composite cylinders for green hydrogen. Upasana is here with all those details. Upasana.
Thanks so much for that. Well, Technoplast will remain in focus as the company has received final approval from Petroleum and Explosive Safety Organization. This approval is mainly for the manufacturing and supply of high-pressure composite cylinders for hydrogen. It is the first Indian company to receive this approval, and it believes that the move is in line with company's efforts towards sustainable green energy. With this approval, company says it is poised to capitalize on rapidly growing market driven by global shift towards sustainable green energy. It believes that this technology will certainly have a positive impact on both, that is industry, as well as on the environment.
All right, got it, Upasana. Thank you very much for that. So that's Time Techno also in focus today. Well, with that, let's, that's a big move, almost 15% on the stock. With that, let's go across to Mitesh now and get some more trading ideas going. Mitesh, thanks for joining in. I don't know if you track Time Techno or not, but quite a few stocks in focus today. IT is doing very well. Just give us a general sense and then we'll come down to the specific trades.
So I think the IT did well with the Accenture numbers, and we've had a good gap up opening and good follow through over there. But this market still looks like more of consolidation. So I think trading should be stock specific. I think we maintain that approach that despite the fact that we are hitting new highs, any fresh breakout isn't bringing a fresh momentum. This movement which started from the post-election day results has been stretched. And I think on the hourly to 2 hourly charts, there is now signs of, tiring out. So maybe a pullback will happen, then we'll see some upside. But on the stock side, I have one buy and one sell. Havells is a buy with a stop at 1864 for targets of 1940. And Hind Petro or HPCL, that's a sell. Keep a stop at about 346 and look for targets of 325.
Okay. All right. Thank you so much, Mitesh, for joining us. HPCL, by the way, it has to be adjusted for that bonus. The ex-date is today. So HPCL is flat, absolutely flat today. That is not the rate we should be showing right now. But we'll slip into a short break. Up next, we'll focus on the stocks that are buzzing in trade on the back of fresh brokerage calls. Stay tuned for that.
Well, there is a little bit of pressure. The fact that banks are reversing their up move through the week, that's telling on the Nifty a little bit. So that index is down about 50 points as we speak. Look at State Bank of India, look at Axis Bank, additional dip coming in on some of these banking stocks. So it's a bit of a profit-taking day. And yeah, so SBI days low, Axis Bank days low. Plus, look at what's happening to some of the tech names, TCS, Infosys. They're losing a little bit of that, excitement of the morning. TCS is still up, so is Infosys, but slightly off the high. So let's watch how this goes. Right now, we are putting the spotlight on some more stocks in the broader market. Cummins and Kirloskar Oil have been moving higher on the back of a positive note that came in from Motilal Oswal. Motilal Oswal feels that these companies are going to see strong demand from pretty much all their segments. Vamakshi has more details. Vamakshi, fill us in. Why does Motilal like these two?
Well, absolutely, Surbhi. Motilal Oswal has come out with a report on both of these counters, and this report is with regards to the channel checks that they conducted on the genset segment. They have highlighted that the demand so far in the first quarter of this financial year looks very strong. Overall, genset market stands at nearly 10,000 crores, and the domestic demand is strong across low to mid kVA ranges, and this is mainly on account of pre-buying ahead of the CP/CB4 Plus implementation, and there is very strong demand coming in from all segments. Demand, however, could moderate in July to September of this year is what they expect. But on the other hand, data centers, which is a key growth driver for the high horsepower genset segment, that is growing faster in low to mid-range, and that is growing faster as compared to low to mid-range gensets. The competition is also is rising in the smaller nodes. Kirloskar Oil and Mahindra Powerol are more dominant in this particular market, but Cummins India is itself ramping up in the lower nodes, and as a result, the competition is expected to rise. The pricing for these new gensets are expected to be higher by almost 30 to 40% across most nodes, and in fact, however, the pricing is expected to moderate over the next 2 to 3 quarters as most players may achieve their desired market volumes and may pass on some bit of cost savings to their customers. The export markets, however, still remain weak, but nevertheless, the companies are taking initiatives to export new products, and this could likely reflect in the next few quarters. As far as company-specific growth strategies are concerned, Cummins is expanding presence across all nodes. It is also expected to benefit from strong demand for high horsepower from data centers. Kirloskar Oil, on the other hand, is focusing on improving overall product mix in the domestic market. They're targeting to grow exports too, and this in turn will drive the overall margin improvement for the company. As of now, Motilal Oswal has a buy rating on both of these counters. For Cummins, the target price is 4,300, while for Kirloskar Oil, it is at 1,500 per share.
Okay, thank you, Vamakshi, for joining us with all those details. Gensets becoming that big talking point about all these companies with the new CP/CB norms kicking in very soon. The other stock on our radar is BKG. It has gained as brokerage firm Nuvama has initiated coverage on the stock. It is a buy rating. Manglam is joining us with the details. Manglam, what is Nuvama saying?
Well, Nuvama is saying that the bhujia for BKG is pretty good. Why is that? That's largely because, it's expanding in the rapidly expanding Indian savory snacks market. They've initiated coverage with a buy rating and a target price of 885. They say that this is the third largest in organized ethnic snacks market. They have about 9% share. They're also the market leader in family packs, which is about 60% of their salience, or 60% of their business actually comes in from more than 5-10 rupee packs, the bigger packs itself. And they are leaders in their core states, which are Rajasthan, Assam and Bihar. And not just that, they are looking to expand their domination there and increase their market share by at least 1 or 2% going forward as well. Add to that, they've invested ahead of demand in their capacity, and increased capacity utilization will propel its return on capital employed to about 32% by FY27 earnings as well. So strong demand, good shift from unorganized to organized, and increasing market presence are the few key factors that has Nuvama take that bite of BKG. But that's not the only snacks stock in focus in today's trading session. On the back of that note, we've seen a positive rub-off on some other players as well. Gopal Snacks, for instance, is buzzing around in today's trading session. They are gatia makers, and you also have Yellow Diamond Chips makers, which is Pratap Snacks. That's buzzing around in today's trading session as well. So if you're a snacker, good Friday for you.
It's a very weekend-friendly update. Manglam, thank you very much. And I think we worked up quite an appetite on the back of that. Thanks for getting us the latest on some of those listed entities and stocks. Well, with that, we have to move forward and talk about, actually, before we talk about the next segment, which is fertilizer, I think we have to take a break. So let's do that. Take a break and we'll come back on the other side. We'll have Himanshu Binani of Anand Rathi Institutional Equities, and we'll dive a little deeper into this absolutely phenomenal fertilizer rally that we've seen on the street over the last few days.
Welcome back. You're still tuned into Trading Hour, and last couple of days we saw those big moves on fertilizer names. Today some of them have come in for some profit booking, but the run has been really stellar. Sources told CNBC-TV18 that the Fitment Committee has called for the proposal to cut GST on fertilizers to be rethought by the Standing Committee. To discuss this and what's working for the fertilizer space in general, Himanshu Binani, research analyst in Anand Rathi Institutional, is joining us now to discuss more. Himanshu, good morning. Thank you so much for joining us. I just want to understand, is this possibility of a GST rate cut the only things that's working for fertilizers, or are there other triggers as well for the space overall? I know you don't cover all the stocks, but just in general, what's working for the sector?
Right. So good morning and thank you for having me there on the show. So first of all, when you actually look into the fertilizer segment, so we have seen a very stellar sort of run up into the stock prices for the last few days. So however, we are of the view that this sort of GST rate realignment basically, and number one, bringing the natural gas under the GST regime. So this has been going on for quite some time, and what I understand is that this in turn is not likely to have a meaningful impact basically on the overall earnings profile of the companies. However, there has been some talks in terms of the DBT regime, which is likely to get revised, and if at all the government comes up with a DBT 2.0, so which is currently into the pilot stages. So if that comes in, that in turn would result into a re-rating basically into the overall space.
So you're saying that this news around possible reduction in the GST rate from 5%, this is not particularly meaningful. And even if, you're saying even if natural gas gets it, anyway, it's not being discussed in tomorrow's meeting, but you're saying even if natural gas gets into GST, that will not have much impact on the feedstock prices for fertilizer companies, Anand?
Right. So basically, when you actually look into natural gas, and if at all we consider that natural gas coming in under the GST regime, so one has to understand that natural gas is largely used by the urea players. From natural gas, we get ammonia, and from ammonia, we get urea. So in terms of the natural gas, currently we are under that VAT regime. So however, if this so which is considered as a cost basically for the urea players. So, and one has to understand that the entire cost is fully passed through. So if at all the natural gas is coming under the GST regime also, I do not foresee any sort of impact on the PNL. So PNL should be largely neutral for the urea companies. Secondly, if you look into the non-urea side, non-urea, they do not extensively use the natural gas. However, the discussion of bringing the GST from 5% to 0, so that in turn would result that the MRPs are likely to get decreased in the final market, so which in turn would be providing some sort of help to the farming community. So one has to see that how things play out on that side. Thirdly, when you actually look into the industrial segment side, so each and every fertilizer or moreover the urea players are having an industrial chemical segment also, where they have excess ammonia which they have been generating, and the ammonia and the byproducts they are using that in the industrial segment. So one has to see that how things play out on that side, so that in turn would be beneficial for few of the companies like Deepak Fertilizer, Chambal, GSFC, to name a few. So we would be awaiting for a final trend from the government before jumping to any sort of conclusions.
Okay, all right. Take that point, and the stocks have been so excited ahead of the GST meets that clarification is very important as well. You briefly mentioned DBT as well. Possibility of that coming in that would put money in the hands of the farmers directly, and the companies will not be, a part of that particular transaction. But there are already no subsidy issues with the companies, right? Do you think the working capital and the balance sheet, they have become better in last couple of years, and they're getting subsidy on time, and that is not a problem for fertilizer companies right now?
So currently, when you actually look into the subsidy receipts and the subsidy outstanding, that has been phenomenal. So one can see one of the best balance sheets basically, be it FY23 or FY24. So on the subsidy side, the subsidy disbursement from the government has been very timely, number one. Secondly, in terms of the outstanding, that continues to remain at a very comfortable zone. thirdly, this talks of subsidy and the DVT 2.0, which necessarily means that the subsidy gets directly credited to the consumer's account than that of the industry's account, basically. So what that means is that the working capital requirement would be less, and to that extent, the interest cost savings and the lower working capital, that would be the impact basically on the P&L as well as on the balance sheet side. So that would be like taken as a positive, and that would be something which the industry would be like celebrating on, and that would be a structural change basically in the sector.
Okay. Okay, all right. Other than that, I also wanted to understand the nano urea opportunity, because there's been a lot of chatter around that as well. We had Coromandel International talking about that new nano urea plant. Is it something that would be earnings accretive for some of these names? You have NFL as well, which has announced it. They have not, of course, commissioned it yet, because the ground demand has been lower than what was anticipated. Do you think that could be the additional kicker?
Right. So basically, one has to understand, or maybe like look at the nanotechnology this way, that due to the lower literacy rate basically in India. So what is happening is that the farmers are like not adapting to the newer technology, number one. So when you actually look into the nano urea side, so which is like more of a push product than that of a pull product, number one. Now, secondly, when you actually look into the other companies, be it Coromandel also, now they have also entered into the nanotechnology, and they have like recently launched the nano DAP with somewhere around a 200 million capacity, which is somewhere around a 500 ml bottles. So they had started initially with the Vizag plant. However, they recently got an approval to manufacture this product in their Kakinada plant. So as of now, what we understand is that they have been like getting good response from the farming community, and this would be like the first full year of operations for them. So maybe like we need to wait and watch how things pan out in this current season before like jumping any sort of like conclusions.
Just to go back to the point on subsidy and policy, in the February budget, I was just checking the numbers. The amount of subsidy was actually reduced. Total subsidy was 24,420, which was lower than the last fiscal. And then it's nutrient-based subsidy, right? I think they kept it for phosphorus-based fertilizers. It wasn't available for potassium and a bunch of others. I think for diammonium phosphate, etc. The subsidies the levels were not increased. Now we're running into the full-fledged budget. So just tell us, in terms of the next triggers to watch, beyond the sentimental impact of monsoon and the GST rate cut, which, as you explained, is not really material, from a more material fundamental standpoint, what are the next important triggers to watch out for fertilizer companies, given that we are moving towards the budget now?
So from the current standpoint, if you see, so the recent rally has been like more of a pre-budget rally, and this was like fueled by this the incremental expectation of the normal monsoons basically, which in turn has like fueled this rally. So one has to understand that from the current standpoint, if you see in terms of the valuations, etc. So the industry has been like growing at a low to mid single digit sort of CAGR in terms of volumes over the last 2 decades. And what I understand is that this sort of like run rate is likely to continue going forward as well. Secondly, in terms of the recent MSP increase also. So what we have seen is that they are when we actually look into the prices of the mandi prices of the key crops as well as the MSP. So most of the crops are like trading well above the MSP rates, and going by the better farm economics outlook for normal monsoons, and thirdly the subdued RM prices. So what I understand is that from the current standpoint, each and everything is like factored in, and there would be like no incremental excitement basically from the current.
Got it. So Himanshu, just very quickly, I mean, I take your point that the rally has factored in everything, but purely from an earnings growth perspective, margin improvement perspective, because you said that some of the raw material prices should be cooling off. So just from a pure earnings perspective, which are the stocks that you would watch out for, where we could get at least decent earnings?
So from the current standpoint, we continue to like Sumitomo Chemicals, which is into the agrochemical space. So we continue to like Sumitomo Chemicals and UPL in the agrochemical spec, while we continue to prefer Coromandel International in the fertilizer space. So these are the structural plays, and one should like expect a stable sort of like earnings growth going forward also.
Okay, all right. Himanshu, thank you so much for joining us and making sense of what's happening in the fertilizer space. A lot of sentiment uptick is what's been seen in the fertilizer stocks lately. But as he points out that it would not make such a big difference in the earnings landscape. Time for a short break now. Prime Minister Narendra Modi flagged off the 10th International Yoga Day celebrations at Srinagar today. More on this when we return.
Well, it is the 10th International Yoga Day, and it was Prime Minister Narendra Modi who himself flagged off all the celebrations across the country and around the world, starting with the Dal Lake in Srinagar on the occasion of the 10th International Day for Yoga, where he was joined by over 7,000 participants. The theme for this year's celebration is Yoga for Self and Society, focusing on yoga's impact on personal well-being and community health. Across India, leaders including JP Nadda, Yogi Adityanath, Naib Singh Saini also joined in the celebrations and the proceedings. Since its inception in 2014, the Prime Minister has led the celebration for yoga at various iconic sites across the country as well as overseas.
Okay, all right. CNN News 18's Ishan Bani brings us this.
Modi performed yoga along with at least 7,000 people who had come to become part of that International Yoga Day event being held in Kashmir. It was this beautiful location which was chosen as venue for the Prime Minister's visit and then also his yoga. There were huge security arrangements that were made. Marcos commandos were deployed in the Dal Lake, and also Srinagar. Some roads connecting towards the Dal Lake were also cut down. The Prime Minister yesterday had also mentioned the need for holding of assembly elections and said that very soon there will be elections that will be held in Jammu and Kashmir, and also promised that J&K will soon get statehood. But the messaging was that the Prime Minister coming to Kashmir and getting the scenic visuals from the banks of Dal Lake performing yoga is something which has cheered one and all. While there was excitement among youngsters who were part of this mega event, while others were keenly watching the Prime Minister from Kashmir, because this is a messaging that Kashmir is safe and it can hold international events like G20, International Yoga Day and other major events where a larger participation of people from across the globe have slowly started to be seen. He also said that even in the Gulf countries like Saudi, it has become an integral part of some people, and India's brand is being seen now globally when it comes to yoga. The rain in the morning played a spoil sport, but then there was brief drizzle while the yoga happened, and even now the rains are taking place, but the event has now ended.
Okay, if you need any inspiration, beautiful scenery of Srinagar, really just adding to the sentiment around World Yoga Day. But Sonal, I don't know, maybe I'll try tree pose for today. At least one pose, one asana I should do today.
You know what we should do? Breathe in all the happiness, breathe out all the stress. That's the best way to celebrate Yoga Day every day. But I think we'll take your leave on Trading Hour today. As we do that, let's listen into a special conversation CNBC-TV18's Shubhani Gharat had with model, actor and fitness enthusiast Milind Soman, his mother Usha Soman and wife Ankita Konwar. Shubhani began by asking Ankita about finding the balance while working out. Take a look.
I have 12 questions, 4 for each one of you. You have to answer them fast in split seconds. Okay? It can't be slow.
Is it a competition? We love
Start your warm-up. Yeah. Start your warm-up. All right. So let's just start.
Is there a buzzer? No.
No, there is no buzzer, but I'm going to start with a tick, tick 1, tick, tick 2, not slow at all. All right. So first question, Milind, favorite exercise to start the day?
Push-ups.
Push-ups. Ankita, quick fix for sore muscles.
Yog Nidra.
I best post-workout snack. Fast. Tick, tick 1, tick, tick 2, tick, tick 3.
Anything that you like.
Anything that you like. Okay. Okay. Go to healthy breakfast, Milind?
Fruits.
Fruits. Ankita, favorite yoga pose for stress relief?
Stress relief. I would say Titili Asana, the butterfly pose.
Favorite guilt pleasure?
Oh,
A lot. Chocolate.
yes,
Why not?
chocolate.
Chocolate. Not chai and Mari?
No, that's not a guilt.
Pleasure. Favorite cheat meal, Milind?
Well, I don't cheat. I eat whenever I like, but I cheat her because she keeps saying not to eat these things. So the thing I think she frowns on most is chocolate mousse.
Yes.
Chocolate mousse. Okay. Ankita, favorite indulgence?
Noodles.
Noodles.
Packaged noodles.
Noodles, really
All
bad.
the Maggies and everything.
But I allow myself one packet.
And the
a
Korean
year.
ones.
One packet a year.
One packet, a year.
One packet a year.
Yeah.
I'm going to keep a tab on that.
Really?
You know that.
Really?
Really? She's got your lie.
No.
No, it's true.
Okay. Milind, most underrated exercise, according to you?
Push-ups.
Push-ups. Underrated.
Yeah.
Okay.
I mean, I meet so many people who can't do push-ups. It's actually a basic exercise. I would
Yeah.
say push-ups, squats and pull-ups are the three basic exercises, and then variations of all these.
I can't do pull-ups.
With pushing, pulling and squatting.
Yeah.
But these are the most underrated. I mean, people should start with that, but they start with bicep curls and
Isolated exercise.
yeah, isolates. They don't start with all-round body
So,
exercise.
yeah, anything that involves all body
Entire
muscles
body, yes.
together. Ankita, best time of the day to work
One
out?
second, I want to
Yeah.
interrupt. The best exercise underrated, Surya Namaskar.
Surya Namaskar. Yes, I think she would definitely agree to Surya Namaskar as the
Absolutely.
most underrated exercise as well. But best time of the day to work out.
After you have woken up, 30 minutes after you have woken up.
So morning or evening, Milind,
For what?
for working out, what do you prefer?
Anytime.
Anytime.
Yeah.
Anytime. Okay, top tip for staying motivated for your exercises.
Just to feel fresh.